Hey guys, it is Mark Coe for the 28th of January. Did our open session last night for the week and just wanted to look at a couple of follow-through moves here today. So the preference coming into the week was going to be to look to sell uh, E-minis on rallies or counts. So we had a entry here to the short side this morning. This was at 8 a.m. this morning, U.S. East Coast time. You can see the entry right here, 26.49. Again, a rotation of about 27 points, achieving the lows of the day were 22 and a quarter. But again, the area we've been focused on is about that mid 20s, 25, 26 area. So about a 24 point move and $1,200 per contract. So really nice move in the favored direction of short. Again, based off the sell count, this is what we're using in the room here. Crude oil had a nice move. Again, another market we've been looking to be sell side in. We saw the rally over the last week, and then again the open last night, and we sold off about little over $2 today. So again, off of that top edge zone, $2 sell. So you gotta love that type of movement. Currencies here today. So currencies have followed through. Again, continuing to the dollar weak side. So euro dollar. Again, we're looking for these shorter term intraday type of setups. And Euro produced some here, but again, not as big a move as we saw on Friday. Again, there's your buy count, 1404, trades up to about 1440. So some money, but on a standard lot, you're only looking at about $300 or $400. Nothing of too large of a consequence. But again, to me, what's important is can you keep repeating that where you're finding the zones, where you're finding the areas to deal against. And to me, the euro has given you that continued reaction off of its bottom edge. Talked about that in the Sunday night session. I talked about it again today in the U.S. Open, which is can you keep putting yourself in that position to find those edges? We're getting the bigger picture counts right at the bottom edge, which means your risk is really tight. Your upsides multiples of your risk, and that's what you want to keep looking at. So as we get into this week, and again, not much expected from the Fed, but you certainly have to be aware of any FOMC. It's just not expected that there's going to be a change, and we will obviously be keen on what any statement or lingo changes may be in store for us. But other than that, it's not expected to be a rate hike. So we'll keep monitoring that. And again, I like the direction. I like that we're seeing reactions off of our levels. There's a lot of profit potential there. So keep at it, keep managing your risk, and enjoy the rest of your week. Cheers, guys.